Three huge changes have just been announced to the mortgage industry, which is going to affect everybody on the spectrum that's going to need a mortgage in the future. Here's the three changes. The mortgage rate that you get is determined by several factors such as your credit score. Before this change was announced, you only needed a credit score over 740 to get the best mortgage rates. Starting May 1st, there's going to be two new buckets. Those who have credit scores from 740 to 760, 760 to 780, and now to get the best rates, your credit score is going to need to be over 780. Number two, anybody who needs to do a cash out refinance are going to have huge and dramatic increases to the interest rate. Be similar to what investors pay to get a mortgage, which are traditionally 1 or 2% higher than a homeowner that's taking out a mortgage to buy a home. The third biggest change is what I look at as a redistribution of interest rates from what are considered the least riskiest borrowers to the higher riskier borrowers. Those who are putting lower down payments and have lower credit scores are going to get a much closer interest rate to your borrowers who are putting big down payments with higher credit scores. In my opinion, this is an attempt by Fannie Mae and Freddie Mac to level the playing field between those in better financial situations and those who may be struggling but are making an attempt to become a homeowner. Now, there is one negative impact that I can see for sure that's going to affect everybody at all risk profiles. There's a new category for your debt to income ratio. Before this change, your debt to income ratio didn't affect what mortgage rate you received. It just determined how much you'd qualify for. With this new change, if your debt to income ratio is over 40%, you're now going to have to either pay higher fees to get a mortgage or get a higher interest rate to make up for those higher fees. Now, more than ever, it's more important to be prepared, get pre-approved, know where you stand so that you can take advantage of an opportunity before these changes happen on May 1st, 2023. Now, in terms of what this means for the overall market, there are going to be a rush of applications coming in to get ahead of these changes for those borrowers who may be impacted negatively. The good news is, back in November, Fannie Mae and Freddie Mac eliminated these mortgage rate adjustments for first-time home buyers. So the good news there is, if you're under the median county income level, which varies by county, you don't have to worry about these changes. But again, it depends on where your income falls. You'll need to talk to a mortgage officer to understand if you benefit from these changes or if you're impacted negatively. Let me know what you think of these comments. Is it change anything for you? What questions do you have?